Hey everyone, how's it going? Ryan here, back with another weekend analysis on Nasdaq and S&P 500. Last week my video was a little long, so I'm going to keep this one as short as possible. So as a reminder, I'm not a financial advisor. This is not financial advice, it's just my opinion. Please don't use it to take a trade with real money on your own. So I always start with the dollar index, and here we have the weekly chart. We see we had some consolidation, price dipped down to take out the sell side liquidity below this low and this low. We've seen price rally up. We're looking for price to take out the buy side liquidity above this high and above these relative highs and reach for the inefficiency here in red. This red here is going to be a long-term objective, so in the near term, I'm looking for price to trade to the monthly volume balance here in purple. So let's just zoom in a little bit. So if we see this monthly volume imbalance as our final destination, on the way we're going to have a couple rest stops. First being this old high and then the consequent encroachment of this premium wick. We could see price go up to these levels and then have some retracement before going to our final destination. So for the past 6 weeks, we've seen price rally, and just last week we took out our weekly rejection block. And now we see that price went up to take it, but then it closed below it. So this signals to me that we could be due for some retracement here. So we'll go into a lower time frame in just a bit to take a look. But below here, if we do retrace, I'm wanting to see this old weekly CIBI in red to act as support for price. And of course, we have the balanced price range here. I want to see this remain intact until we hit our objectives. Here on the daily chart for the dollar index, we can see the old weekly CIBI that I said I want to see support price. And then a few other inefficiencies below it should we break through the old weekly CIBI. But ideally, I don't want to see any of these reached for until we get to our objectives. But right now, I just want to focus in on just the last week of action. Okay, so zoomed into the last week of price action, we see that Thursday we had an aggressive move up. And then Friday, we went above the weekly rejection block, but we closed right below it. So we could see some retracement. Here we have a volume balance that can see price retrace and fill, but pay close attention to the discount wick on Friday and the premium wick on Wednesday. I've marked out the consequent encroachment levels. And since we had such an aggressive move on Thursday and Friday, we can use these levels as a fair value gap or implied fair value gap, if you will. So if we mark out a zone here, if we see price retrace, I'll be very happy to see this area provide support and launch price higher above the old high that we are targeting, especially if price can bounce right at the middle between this consequent encroachment and this consequent encroachment. So right in the middle of this implied fair value gap. If price can use that to launch it higher, that's what I'm looking for. So this week I'm going to start with the Nasdaq first, and here we have the weekly chart. The light green here, this is going to be my target. I've been talking about this target for weeks now, but below it I did mark out another inefficiency here. It's a little bit smaller, but I'm primarily looking for price to go into the light green color first. Below price we also have this volume imbalance that I marked down purple. So I could see price get this and then retrace a little bit before heading down to my target. Above though, I see this consequent encroachment on this weekly wick here, and we have a weekly order block up here. I'm looking for both of these to act as resistance. So besides that, not too much detail. We're going to go into the daily chart now. Here on the daily, we see that price traded up on Wednesday and then aggressively down on Thursday. So this one up candle, one down candle creates a balanced price range here. You can probably go down to a lower time frame to mark out more in detail where the balanced price range is. I'm not going to do it in this video. I'm going to try to keep it short. But if that's something you want me to do in the future, leave a comment below. Let me know that that's something that you're interested in, and I can maybe jump down to the 4-hour time frame, for example, to get a little bit more detail for you guys. But for now, I'm just going to stick with the daily. So we have this one candle up, one candle down, balanced price range. That creates the wick on the weekly for that premium wick, and we marked out consequent encroachment here. So if we see price rally, I want to see this consequent encroachment level, this 15,195 level, act as resistance and push price down. I have these two CB levels marked out. If price declines, I want to see these not provide any support. I want to see price go through it like with as though it had no influence. Go straight down into this volume imbalance and into our target. Now remember, this volume imbalance could provide some retracement, so we could create a high here early in the week, go down here in the middle of the week, provide some retracement, and then later in the week go and reach our target. So that's something I can be anticipating. So let's jump into the ES now. Here we have the weekly chart for ES, and I'm just going to zoom into the price action here. We can see that we have two inefficiencies here. The green one is going to be my target, and then the blue one, there's a small blue one here between this candle and this candle. Price traded down a couple weeks back, but did not actually reach it. And then we had some kind of consolidation last week. So with that, we have a premium wick. I marked out the consequent encroachment. And then we also have this old buy side imbalance, sell side inefficiency. I marked out in orange. This I want to see as resistance. In fact, it's going to be my last line of defense if price will rally up. Ideally, I would like to see price get repelled once it reaches consequent encroachment of this wick and go down to reach our target here in green. The blue one can act as a speed bump. So if price comes down to the blue, we could expect some retracement, and then I want to see price shoot down into our target. So let's go into daily for some more detail. Here on the daily chart, remember the green is going to be my primary target, and the blue is going to be a speed bump that we could have. It is located right below the swing low here, so there is some sell side liquidity that we could be reaching for. And then price can either go straight through for our target, or we can have some retracement. So those are going to be the two potentials that we have should price start to decline. But before that, I do expect some retracement. So if we do retrace, we have this daily CB level that we could expect price to go and use it as resistance. We also have the weekly consequent encroachment of the wick up here. And like I said, this could be a balanced price range similar to Nasdaq. So if we go down to a lower time frame, we could mark out some inefficiencies. The last thing I want to point out is the S&P divergence we had with Nasdaq. If you look at the high we made this week compared to the high we made last week, we see that we have a lower high. If we are to compare it to the Nasdaq chart, we see that Nasdaq created a higher high than last week's high. So Nasdaq had a higher high, ES had a lower high. So there is a divergence here similar to way back when we had the divergence back here. So the only difference is now ES looks to be relatively weaker than the Nasdaq. So that's why I switched the order, because ES is going to be the one that I'm going to be looking to take shorts in. And since we have targets below the marketplace, ES is going to be the one that I'm looking to short, and any retracement is going to be taken with Nasdaq for me. And this is for me. Remember, I'm not a financial advisor. Don't take any trade based off anything I say. I'm just telling you what personally I am looking for. So thank you again for watching this week's video. And if you like it, please give me a thumbs up. Please subscribe. Leave me in a comment below. I would love to hear your guys' ideas. And until next week, I'll see you.